Welcome to Tax Tips. This week we got some write-in requests from some of my adoring fans out there, and they told me they want to hear about whether they should incorporate or not. So I'm going to cover that topic today. So the first advantage to incorporating is liability protection. That means that if you incorporate, those greedy lawyers and the greedy creditors can only go after assets that are in the corporation. They can't go after your personal assets. This advantage is a little bit limited because oftentimes when you get a loan, even though you're incorporated, you have to give a personal guarantee. So if you default on that loan, creditors can still go after your personal assets. The second advantage, the advantage is the tax deferral. So a corporation gets a tax deferral because their tax rate on business income is around 10 to 12% versus business income that's earned personally is taxed at 35 to 45%, or your personal marginal tax rate. So there's that deferral because of that lower tax rate in a corporation. However, this advantage only makes sense if you're actually going to be leaving money in your corporation. So if you're just going to be earning that business income and then taking it all over your corporation anyway, because you need to fund your mortgage or your car or pay for your kids or whatever you spend money on, then there's no deferral. There's only deferral, and my rule of thumb is if you're going to leave $30,000 in your business bank account. So that's after all the business expenses are paid for and after all your personal expenses are paid for. If you're going to have $30,000 left over, then there's this tax deferral that does make sense. Definitely an advantage. The next advantage is when you incorporate and you get shares of your business. Well, if you go and you sell those shares of your business in the future, you can utilize the capital gains exemption, which allows you to exempt up to $866,000 and change of capital gains. And if you don't incorporate, you don't get this advantage. And the last advantage, in my opinion, is a minor advantage, and that's basically what expenses you can deduct in your business. But basically, you can deduct pretty much the same expenses that you can in a corporation as you can personally. The only advantage is that SEER is less likely to scrutinize expenses that are claimed in your corporation versus expenses that are claimed personally on your personal tax return. So that's the only advantage, is that you don't have to deal with SEER as much, but it's not a major advantage or anything. Okay, so what are the disadvantages of incorporating? Well, the first biggest one, obviously, is the costs. So a corporation has to pay about $3,000 in professional fees to accountants and lawyers combined. That's $3,000 combined between the two of them, even for the most simplest corporations out there. And that's for the corporate tax returns and the other legal documents that lawyers do. And then also, just to incorporate in the first place, costs about $2,000 of professional fees. So it's a pretty big cost. $3,000 is no throwaway cash. So you definitely have to consider that when you're incorporating. And there's also other administrative time that it requires for corporations. And the other disadvantage to incorporating is if you're going to be running losses, it's better to have those losses personally and not in a corporation, because you can deduct those losses against other sources of personal income in some circumstances. So if you have a corporation and you're running losses, those losses can't be used against your personal income. So they're just carried forward to be used against actual business income in future years when you're running a profit. And so that can be in a disadvantage to incorporating in the very early years when you're running your business. But for me, it all comes down to basically this income tax deferral. And it only makes sense if you're going to have $30,000 left in your corporation after everything's paid for. And then that deferral often will make up for the $3,000 of professional fees that you're going to have to pay. And so each different industry and each different person, it's going to differ on a case-by-case basis, whether it makes sense for them to incorporate or not. Some businesses need more liability protection than others, and some are more cash intensive than others. So it's a case-by-case basis for sure. So if you have any questions, whether you should incorporate or not, don't hesitate to reach out to me. And thanks for everyone for sending me questions and stuff like that in the message board. It's awesome. I love talking about taxes, so that's a definite distraction from personal tax season. So also, I just want to say the weather is warming up. It's heating up. Pretty soon we're going to be having beverages on the patio. So I'm looking forward to that. So thank you very much for watching. And of course, if you're thinking taxes, who else to think of but Tets? Have a good day.